Everything is going electric, and Tesla is at the top of the game. They made $25 billion in income from the sale of 466,000 automobiles in the second quarter of this year, and they plan to create 2 million cars this year, bringing in $100 billion. The Cybertruck is set to debut shortly, and the Model Y is now the best-selling vehicle globally. For them, this is fantastic news. On the other hand, BYD holds a 16.7% market share in the worldwide electric vehicle market, whilst Tesla holds a 21% share. Two additional Chinese businesses, GAC 6%, Volkswagen 4.7%, and SAIC 5.7%, complete the top five. Thus, 3 of the top 5 EV brands in the world are Chinese. This is where the guard is changing. With a projected price-to-earnings ratio of 66, Tesla stock still appears pricey following a 20% decline. This indicates that investors' confidence in the automaker's business is still very high. However, with a market valuation of more than $700 billion, Tesla is among the biggest corporations in the world. Due to the stock's high valuation, some investors may be discouraged from purchasing the shares and reduce their potential gains. Without a doubt, the price of Tesla stock has been declining significantly, but we think it will eventually rise and most likely approach $300. We know that this advantage will materialize someday, even though it might not come as soon as many anticipate. Let's now concentrate on Tesla. Here with us is Steve Wesley, a former member of the Tesla board of directors and the founder and managing partner of the Wesley Group. Steve, you are so welcome here. I would like to discuss the EVs that we are keeping a close eye on. Once more, Tesla reduced its prices. Elon Musk has stated that they can lower costs as necessary, but it appears like they do it on a regular basis. What do you suppose the reason behind that is, and how does it relate to the EV market? I'm sure this is amazing news. With its 6th price cut of the year, Tesla has ignited a price war throughout the globe. Furthermore, why not? With 13% net margins compared to 7% for Toyota and 2% for Ford, they are in a unique position to win this pricing war. Others are unable to keep up. Because they are grabbing territory all around the world. For Toyota, GM, Ford, and other companies, this is bad news, but it's fantastic news for customers. The cost of EVs is rapidly declining, and by late 2025 or early 2021, they should be less expensive than gas-powered vehicles. Everything is becoming electrified. When assessing Tesla's worth and choosing whether to purchase shares, investors have a lot to consider. Tesla has the potential to be a really inventive and game-changing company. Tesla and its stock could soar to new heights if Elon Musk can fulfill his promise and implement full self-driving (FSD) capabilities throughout its range of cars. Hey everyone, happy to be back at Tesla Hype. Analyst Jeff Window of Edward Jones began covering Tesla in 2021 and assigned it a hold rating. Up until then, he claimed, Tesla was still by far the market leader for electric vehicles worldwide. Even with the onslaught of new competitors, the company's $800 billion market valuation at the time already factored in significant long-term growth and remarkable achievements in business endeavors beyond the auto industry. He thought that in order to achieve market pricing growth in earnings of between 30% and 40% each year over the next 10 years, new goods like autonomous driving, semi-trucks, and affordable sedans would need to be successfully developed and introduced. To keep informed about all that Tesla is up to, hit the like button, subscribe, and enable notifications if you enjoy this kind of information. This expert said at the time that Tesla would only be able to sustain its present valuation if the worldwide EV market kept expanding quickly. Just 2 years have passed since then, and the company appears to be much more confident about Tesla. Tesla's stock was moved from a hold to a buy by the company's analysts, who also added it to their list of stocks to watch. American financial services company Edward Jones raised its Tesla recommendation to a buy earlier this year, marking the first time that it has done so despite anticipated pressure from economic headwinds on Tesla's near-term auto sales. The company claims that Tesla's share price undervalues its long-term development prospects, and that the manufacturer will be able to capitalize on the growing EV market thanks to the introduction of new products. Among many other things, Edward Jones provides wealth management services, stocks, bonds, mutual funds, retirement and college savings packages, and much more. Thanks to its branch network of more than 15,000 locations and 19,000 financial advisors, it provides investment services to clients in the US and Canada. At present, the organization maintains connections with around 8 million customers and oversees approximately $1.7 trillion in assets globally. Edward Jones, which only works with individual investors and small company owners, had almost $8.5 billion in revenue in 2019. More than 15,000 Edward Jones branch offices can be found across North America, more than any other brokerage company. The corporation has had remarkable development, going from $16 million in yearly revenue in 1977 to over $12.3 billion today. Investors shouldn't take Tesla's approval as a buy for granted from a firm of this caliber. What might Tesla be up to at this moment? Let's investigate. The Tesla Model Y has continued its incredible sales rise, particularly in the US, after finishing the first quarter of 2023 as the best-selling passenger car globally. In the first 4 months of 2023, registrations for Tesla's best-selling model increased to 127,541 from the previous year. The Model Y outsold popular automobiles and SUVs that had previously ruled the sales charts, according to this historic performance. Experts have predicted that Tesla's establishment of a sizable new EV charging business will significantly increase the company's valuation in the near future. In order to convince customers that they can travel throughout the nation without running out of power, the automaker is taking a risk by creating its own network rather than turning charging into a profit center. The charging industry is only getting started and has the potential to be a big source of income for Tesla. According to a recent research by investment firm Piper Sandler, Tesla's initiatives to allow other automakers to use its charging network may bring in up to $5 billion in income each year for the company in around 10 years. Former Tesla employee and current GM board member Jonathan McNeil stated that this is always a little bit of an A-to-S moment for Tesla. According to McNeil, Tesla is generating income from something that has previously been a financial hardship for them. Not to be overlooked is Tesla's devoted following and strong backing. An army of followers is the driving force behind Tesla's incredible performance. The EV manufacturer's contentious CEO and problems with quality control don't seem to bother its supporters. Rather, they find the performance and design of Tesla vehicles, as well as the fact that they're novel and distinctive, to be enticing. Although it's hard to predict with certainty when or if Tesla's market valuation will top $2 trillion, it's reasonable to assume that it will eventually do so given its strong position in a rapidly expanding sector. If the market declines, it should present a favorable window of opportunity to buy the shares, particularly given Tesla's ongoing rapid business expansion. Unlike the majority of its competitors, who are having difficulty staying afloat, Tesla is still making waves in the sector despite the market hurdles. We know that Tesla's stock price is moving upward and into positive territory, even though it isn't at a very rapid rate right now. The market has shown to be very advantageous for Tesla. The manufacturer is probably going to benefit more from agreements with large corporations when it comes to raw materials, superchargers, FSD, and other things, given the demand for Tesla vehicles. What are your thoughts? Please share your thoughts about Tesla with us below. Click on the next video that appears on your screen to find out more about Tesla's recent activities. I'll see you there.